Welcome, everybody, to our long verticals and diagonals webcast. I'm Connie Hill. I'm happy to be here with you today as we discuss principally these two strategies. And I think it's really helpful when we can really focus on a couple strategies in our sessions. You know, one of the most asked questions that people will give to me is, how do you find the example trades? That's come up in our surveys a couple times. So one of the first things we're going to do today is we're going to create a new watch list for stocks that could be applicable to both of these strategies. And I'm going to say you could use it for pretty much most of your option strategies going forward. And it's going to be our go-to list. So we are going to make sure that you feel like you have a lot of choices when you are looking for your own practice trades to work with. I am joined in the chat by Barb Armstrong. So glad Barb is here. Good. I was going to say good friend, fellow veteran coach of the markets. As you have questions, go ahead and ask them. I'm going to keep my eye on the chat. Barb will have my back there as well for maybe things that I can't quite get to. She will help me out with that. And I do want to say happy to see so many familiar names out in the chat. Let's go through our disclosures and let's get on with our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for education and information. Don't consider it a recommendation. We'll be using the Paper Money software application. It's what you download to your computer. It's a very robust version of Thinkorswim. Past performance of any security or strategy does not guarantee future results or success. There's a difference in paper money than with a live market in that paper money will not assign short options early. A live market can do that. So if we get into any of those scenarios, because with these strategies we might, I will alert you to that. Actually, we're not going to have any announcements necessarily today, although I guess I could make an announcement, but I don't have one to make really. And one of the things that we will emphasize in this class is the impact of price, time, and volatility, because those are the main elements that really affect an option's price. And so we don't want to forget any of those potentials. Now, price typically is the biggest one, but we've also got time decay. And if volatility goes up, that could pop up the premium of our option. And depending on what kind of a strategy we're in, it could be nice for us or not. In this scenario, in our class, usually it's a good thing if implied volatility creeps up. Let's jump over here to Thinkorswim. We're going to be looking at a lot of examples as well. I know some of you are anxious to look at some examples we've had going on, and we for sure are going to do that. All right. S&P, it looks like, I mean, this gap up yesterday, this was just such an enormous move. I think we shouldn't be too surprised. There's maybe earlier, especially in the mornings, a little bit of profit taking. But it looks like the markets are crawling their way back up. So S&P here is only down about 0.16%, so just kind of marginally. So is the market holding on to those gains? For the most part, but there could be some profit taking going on here as well. And with that big of a jump, we wouldn't necessarily think that it's going to stay there, that there could be some retracement. Typically, the bottom of a gap, like a big gap like this, will act as support. So many times I'll come in here and I'll say where the gap is, and I'll just draw my little horizontal line there because my expectation is that that will act as support, but it doesn't have to. Just many times it does. Okay. Let's head over to the Scan tab. And on the Scan tab, I'm going to help you create a watch list of stocks that we could use pretty much for any strategy. So let's show you how we might build this. And it's really an easy scan. So you'd go into your scan, come over here to Stock Hacker. And I have the stock price being at least $20. Now, some of you might have a different threshold for that. When I'm working with bear stocks, I actually like that to be higher, maybe around $40 or $50. But because I want this to be kind of an all-inclusive list of bullish and bearish opportunities or stocks we're comfortable with, we're going to leave the price at 20, okay? But we need lots of volume. So on here, on the study, you'll have to bring it up here from the add filter. Remember, study doesn't work in your paper side. You've got to look at your live side to run this scan to get that study. And then you'll come up and pick average volume from the volume indicator. All right, you go and pick average volume. And then I just said, let's just do the last 20 periods. And then I put in here 2.5 million as the kind of the average volume we'd like to see, not the average minimum volume we'd like to see. And then there's two important things up here at the top. This one says scan in, and we're going to have it use a Thinkorswim generated and maintained list called penny increment options, which are typically options that are in smaller increments, right? That we see them trade in pennies as opposed to dimes and quarters and 20-cent spreads. Okay, so that helps get us some good liquidity. And then we're going to play with this section here a little bit. Usually I've been going with the S&P 100, and you could do that. I wanted to know if I got back, if I use the S&P 500, how many more results I might get back. And it bumped it up quite a bit. And so as long as we have the volume on those, we're going to try that out, see if that works okay for us. So that's going to be the first part of the scan. Let's go ahead and kind of clean this up a little bit. And let's see if we get more than 136 right now. That was just when I ran it a minute ago. Okay, so one stock fell off. That's all right. You're going to notice there aren't any other parameters in here, not like trying to find trend, trying to see if it's above a moving average, those types of things, because we want to be able to use it for both bearish and bullish. And really liquidity is going to be the big thing. And then we'll be looking at the charts, making sure it has an entry that we like. Now we're going to go ahead, we're going to save this list. Well, if you want to save the query, you can. It's really pretty simple. Let me do this. I can share it with you. Remember, anytime we share a script, whether it's a study or anything, remember it's not guaranteed as to accuracy or timing. And I'm going to put that in there in the chat for those that are here live. For those of you that are not here live, you're listening to this on the recording, I'm going to just post it in here in a text box, just real quick so you can see it. Go ahead and pause and then write down that URL if you want that scan. All right, name it something you'll recognize. Mine is called Liquid Options. Surprise, surprise. Okay, so what we're going to do, let's go run it again. Where did he go? There we go. We're going to save this as a watch list. I'm going to select on our little menu there. We're going to save as watch list. And I'm going to call it Liquid Options. And I'm going to put today's date, which is April 9th. And I like to date my watch list so that I know how long ago I created it and if I need to maybe go update it. Now, if you're only doing this and you're only going to use the scan, you don't necessarily have to do that, because if you save the scan, it will come up in a watch list for you. So like I said, mine is called Liquid Options, but I'm doing this hard watch list because we're going to add to it. Okay, so let's go ahead and save it. Then we're going to do one additional thing, okay? That is, we're going to change this public list from the S&P 500 to the NASDAQ 100, and we're going to run the scan again. Now, we're not going to get nearly as many results, which is fine, and you're going to notice some of them are actually duplicate. That's okay. System's going to take care of it for us. We want to combine this watch, or the stocks that just came up here, with the watch list we just saved. So what we're going to do is we're going to come over here to, let's see, not that one. I think we're going to have to go to this one up here. So not the menu item next to the flame, but the one right above it. Select on that, and we're going to say export, and we're going to say to Microsoft Excel. All right, and what it's going to do, it's going to copy the results out to what it's called the short-term memory of the computer, which is called a clipboard. It's going to clip it there. And then we are going to bring up Excel here. And I'm just going to do a mouse click, And then I'm going to hit paste. All right, so here it's pasted everything in there. Now, we don't actually need all that information, okay? We're going to just start at the top ticker symbol, which is Intel. I'm just going to scroll down here to the bottom of the list. We said there was only going to be a few here, 47 or so. And again, I'm just going to take those ticker symbols. Again, I'm going to do a Control C, which is a copy. If you're on a Mac, it's going to be a Command C. Again, that goes to the computer's short-term memory. And now we're going to add it to the list that we created off that first scan with the S&P 500. So let's come over here to the watch list. We're going to go pick that watch list. When you're doing this, you have to, or you're trying to add to an existing list, you want to make sure it's a list that's been saved and not a dynamic list. Okay, dynamic lists are those that have the little purple target off to the side because they're tied back to a scan that we've saved. So in this, you definitely need to go pick that hard watch list. So I called it liquid options in today's date. So here is liquid options and today's date. So we're going to have this watch list up. Then I'm going to select on it and I'm going to come down here and say import. And then it's going to say, well, where do you want to import from? Do you want to go pick a file? And we're not going to pick a file. We're just going to click on paste symbols from clipboard. Okay, that temporary holding spot. And then it says, do you want to replace the symbols or add to the current symbols? Well, we want to add to it. We don't want to replace, right? We're trying to add this list to what we did on our first one. So we're going to say add to current symbols. I'm going to select OK. And now we have this master watch list. And it's going to be about, I'm going to say in the neighborhood, oh, I don't know if it's quite 150, but I'm going to say it's over 100 stocks. Okay. And we are looking for liquidity. And we're going to screen, as we look at the charts, we're going to screen for entries and trend and things of that nature as we come across this list. So this is one of the places that you could have for yourself, just a nice little watch list. And we're probably going to update this about once a month, maybe once every 2 months, but probably about once a month. Okay. All right. Stay Gold says, make sure you give us an update on Micron and SanDisk verticals, please. Well, I'm sure we can do that. Yes. So is the average volume a custom script? It's not. So question from CB is the average volume a custom script? It's not. It comes from this study indicator. And so we say add file, study, which I just told it to add another one, which we're not really going to need, but then just click down, come down to volume, choose average volume. I changed this to 20 instead of 50. And then I raised this from 1 million to 2.5 million. Okay. Hopefully that clears that up. Okay. You guys have a great watch list now. I will also take this, and those of you here that are here live, I'll share this watch list with you if I can. There we go. And remember, not guaranteed as to accuracy or timing. Let me go ahead, send that out to the chat for those of you that are here live. For those of you that aren't here live, let's put it out in a text box again real quickly. It's going to be the second box down. All right, this is for the actual watch list. This is for that very first scan using the S&P 500, and then just change it out for the NASDAQ 100 when you run the second screen. Okay, we've got it all here now. Let's go look at a couple of traits. One of the things that I have up on here is I have a 1 month return and a 3 month return. And those of you that have been in my classes or other classes, these are scripts that a lot of coaches refer to quite a bit. Okay. So once again, and I will also have all of these scripts I'll have in the notes. Okay. For those of you that are like, oh, I just want to go to the notes, especially if you're listening to the recording, that might be a little bit better. Those of you that are here live, I'm going to put it into the chat. And these are little scripts that just do some quick calculations for us. And one of the things I like to use them for is to give me the idea, should I be looking for a bigger move from this stock or a smaller move from this stock? And so on the 1 month column, you're going to see there's a wide variety here. Marvell is given showing here 34% over the last month and up 46% in the last 3 months. Okay. I might look at something like that and go, you're kind of a bigger mover. Okay. Then say the next stock down here, Amazon. It's up 8% this month, which actually is not bad. Over the last 3 months, I'm going to click on Amazon here. It's saying it's been down about 7%. So those those absolute numbers are quite a bit smaller than say what Marvell is. And so I might say, well, even though Amazon had that big move today, or yesterday rather, right? Like a lot of other stocks, it hasn't been, and you can see this sideways range. Yeah, it really hasn't been a big trender up or down until just that move yesterday. And so forth. Meta's down 3.5% and down 3.3%. So it had been in kind of a sideways pattern for a while. In any case, I want you to know that you could use that as a potential gauge for what strategy. Now, the two strategies that we talk about, our class, we talk about diagonals and we talk about verticals. Many times with verticals, we're really looking for movement. We're looking for the stock to move and we want to capitalize on that big movement. For a diagonal, usually the move that we're expecting from it is smaller. And so we might just go like a little ways out of the money, not a huge ways out of the money, just maybe a little bit out of the money. So say a stock like VST, that might be, we might think, yeah, maybe not as big of a move with this stock than say with Marvell up here at the top. Any questions on that? Yeah, we will also review our diagonals. All right. First trade we're going to do here from our list is ticker symbol DOW. Now, some of you might be a little hesitant to be going into oil stocks right now just because of the volatility of the market and the oil, right? I mean, it had a huge run up. This is not oil, but it had a huge run up. And then with yesterday, man, tons of those oil stocks sold off quite a bit. And what's interesting is some of the other stocks, Dow is not an oil stock, but it kind of had a nice run up here as well. And as I was looking at some of these results today, I was noticing a lot of them took a bounce off the 30-period moving average. 30 period's not that low. Okay, so yeah, they've pulled back, but got a nice little bounce there yesterday. Today, let's zoom in on it here. You know, the market isn't closed, but it has made a trade above the high price of the low candle. Okay, so yesterday's our low candle. High was 39.35. Right now it's at 39.82. So some people might use that as an entry. If some people want to use the close of above the high of the low day, then they'd wait till the close of the market, really make sure that it closes here, because there's no guarantees that it's going to, right? We can see it's faded a little bit here already, but we're going to use it as an entry signal for our purposes. Now on the list, Dow, that comes up here, it's up 15% this month and 51% over the last 3 months. So in your mind, would you consider this a bigger mover or a smaller mover? Bigger mover or smaller mover? Other thing we can look at here that I think is helpful is I've clicked on this caret, this arrow that points down, and I want you to see the beta. We haven't really talked a lot about beta in this class, but since we're talking about the kind of stocks that we might be interested in trading, a beta tells us how volatile a stock is over the last 5 years. Okay, so that's a long period of time. It's just not saying, okay, what's been the volatility in the last 2 weeks, which is some stocks has been a lot. A beta of 1 means it's about the average volatility of a stock in the S&P 500. So that means if we're looking at down, looking at the S&P, they probably are going to move a similar amount, not necessarily trading together, but a similar amount. And something that's greater than 1 means it trades, it's going to move, and it's going to be more volatile. And something less than 1 means, okay, it's not quite as volatile as an average stock on the S&P 500. Some people might use that as a filter for their comfort level as far as volatility. Some people might be okay with betas of 2 or 3 or more. And some people might be more comfortable around 1 or maybe just a little over 1 and maybe a little under 1. Okay, so you can use that as well. And that was not in our scan at all. And I don't think it needs to be. But if you want to add it, you could add that too. Now, Chris is saying, hey, they're going to have earnings on 4/23, which is true. Oops, let me get my mouse back. Yeah, they are going to have it out on the 23rd. When's the 23rd? Well, it's 2 weeks from today. We're going to do a long call vertical on this. And many times, man, we're hitting our targets pretty quickly on these long verticals, many times within the first week, although not always. So I'm not so worried about there being earnings a couple of weeks out here. If it were maybe coming next week, then you might go, I'll pass on it if you don't want to trade over earnings. I'm not saying you shouldn't trade over earnings. I just know there are a lot of people that are sensitive to that they try to avoid or wait for the earnings to come out and then choose what kind of trade they want to do. So on down, let's see if the strikes I had intended here still going to work for us. We can see stocks at 39. So 40 is 39 and change. So 40 is going to be our at the money strike price here. And so we're going to do a 40, 42.50 is what I had pegged for us to do. I think that's still going to look good. I want to point out, look at the liquidity in these options, over 5,000. Okay. Some on the put side here as well. So we're like, yes, this has good liquidity, a 12-cent spread there. Okay. We like seeing something small and happens to be in penny increments. We can see, all right, let's go ahead and say buy our vertical. And we have some different possibilities as far as strike prices to go with, but we're going to start with the at the money. So that's why we're at the 40. Next strike out is 42.50, which we could do. Sometimes people might want to spread it out by more. And that's might be really true in stocks that are more expensive. Okay. In this case, I kind of like where it is right now. 42.50, so a $2.50 increment. So we're willing to risk in the neighborhood of $1 to make what? $1.50. Okay. If we did want to be more efficient by spreading it out by to the 45, we could do that, but then notice we're requiring more of the stock. We're going to require that the stock go beyond 45 as opposed to just going beyond 42.50. Okay, so you kind of weigh that out. So yes, this is going to be a long call vertical. Okay. So why did I pick down, Charles? The reason I picked down as one of our examples is because it was giving us a trade above the high of the low day. So from the list, it was something that gives us an entry signal that many of you are familiar with. Okay. In this class, we have said we can risk up to $2,000 per trade. So on this particular stock, if we're risking $1, oh, that just changed. I'm going to go move that down a little, see if we can get filled at $1. We can do how many contracts? 20. Is 20 a big percentage of these? No, it's a dinky little fish, and that's exactly what we want. We want lots of liquidity. Okay, so we're going to do 20 contracts. If you're not comfortable with that, you wouldn't have to. And then let's do first trigger sequential. Let's create an opposite order. And then we typically want to put in an order of where would we be satisfied if we got the profit? What percent? 50%, 60%, 70%, 80, 85, whatever your number is. A lot of times in this class, I'll let you guys choose, but I'm not today. I'm just going to go with 70 on this example. Okay, so if we have $1.50 to gain per spread, we multiply that by 0.7, that's going to be $1.05. So we're going to take $1.05 and add it to our net debit here of $1. We're going to make this 205, which means basically we'd be happy to get out there. We're not going to try to milk it for everything that it's worth. Okay. Some people find they can get some consistency if they can pick a target where they say, yeah, I'm happy with that. And be able to, once it gets that, then move on to the next trade. It's really hard to get everything out of it. Now, a question comes up here. Why not place a diagonal trade with 1 or 2 rolling options? You could if you wanted. You certainly could. I do have a different example I wanted to use for a diagonal today. But yeah, if that's what you're feeling comfortable with, not a problem, right? You absolutely could. Thanks, Barb, for helping out on maybe some questions there and resources. All right, we're going to hit confirm and send. We're going to put this in our grouping of dynamic diagonals along verticals. I should rename the long verticals something like luscious long verticals or something. All right, we should get filled on that. If we don't, I'll have to go change the price, right? Because we saw it tick up to 103. We'll see here, 101, we should be able to get filled on it. Okay, not too concerned about it. Let's go back to our charts. Another one, actually, let's do this one. Let's do our diagonal. I've got another long vertical. If we have time, we'll circle back to it. I wanted to save some time for our trades. Now, I was using Amazon as a guide for maybe a stock that I wasn't expecting to move as far, okay? It is moved kind of far today, up 3.74%. One thing that was interesting to me about Amazon with yesterday's price action is that this action popped it up so it was sitting here on this support, right? This has kind of been an intermediate support level around 220. And so it also was looking like the bottom of the gap, which many times will act as support. So it's moving up a little bit here today, a little bit of continuation that we could consider it being bouncing up off this support level. Now, when I looked at this earlier today, the candle wasn't quite as big, but I still think we're in an okay situation for it, okay? So let's do a diagonal here. And as we look at the price of the stock, it's at 229, so let's just call it 230. And we want to, if we want to sell something a little bit out of the money, you know, we can look at the chart. Maybe it's going to be 235, maybe 240. We probably wouldn't go clear out to 250 or 260 unless we were buying a super long dated option and we expected it to go there. Okay. So on Amazon, we have weeklies, and we have the weeklies that are also Monday, Wednesday, Fridays, which gives us a lot of opportunities to roll the diagonal. So we're going to start out here. We can even come up here. Since our class meets on Thursdays, it's been kind of helpful to sell the Friday expirations, okay? Because then we can kind of get a week, and if we haven't rolled it by the time we come to class, then maybe we better roll it, okay? So if we go out, the 17th should be next Friday, 8 more days. So we're going to start with where we're going to sell. And I said maybe sell something a little out of the money. Let's see our choices. We've got 230 is going to be our at the money, so 232.50, 235, 237.50. Since it's only going to be for a week, let's go maybe out, let's go $5, okay? Let's go out to 235. And then thinking about what long option we might want, you can kind of look in advance where you want to go. We're not going to go out a long ways like some of these diagonals we have done. We're just going to go out to May 15 and we'll go at the money, okay? So here is our 235. We're going to right mouse click, buy diagonal. Now the system doesn't know what we have in mind. Okay, yeah, it goes and finds our 235 for April, but it doesn't know the next period we want to sell. It doesn't know the strike price we want to sell. Okay. So I told you we're going to go out to May. So we're going to choose the May 15. And then on the strike price, at the money should be 230. So we're going to change our at the money to 230. And it is a decent sized debit here. Okay. If you're in a smaller account, you might not be able to afford this particular trade. But this is not Barb's class of trading a smaller account. This is our class. So, but I just want to recognize that. Okay, versus the first trade was a dollar net debit, right? So that might be a little bit more flexible for a smaller account. All right, so we've got this. We're just going to do the one contract, but our intent here is to capture as much of the time decay that we can of, say, this $2. And then next week, try to sell a little bit more from the next weekly out. And then the next week, maybe a little bit more. And eventually trying to bring down the cost of our net debit, right? We're starting out here at $9.90, but if we can chip off $2, chip off another $2, chip off another $2, that really brings the net debit down quite a bit. It has to take place a little bit over time here. All right. And it looks like our other trade got filled. So let's go ahead, let's submit this. We'll just do one contract here. We could do two, but we're just going to do one in this scenario, and we're going to go ahead and send it off. And then I wanted to bring it up on the Analyze tab. Sometimes we'll do that going into a trade. Let's see which one it'll do. All right. So now I've said hide simulations. We're just showing our actual position. Okay. Here is our 235, 230. Up here, we're going to want to put the expiration date of the longest dated option. So this will be the Saturday after the Friday expiration. I'll come down here and we'll say set slices to break even. And then we're going to just kind of look at our graph here. Some of you might be familiar with the risk profile. Some of you might not. If you're not that familiar with it, I'm not going to go into deep detail on it. I know there are several webcasts that have been done on the Thinkorswim platform that teach you about the risk profile and how to use it. But for our trade specifically, what the important piece is here is what our max gain might be, okay? And so we're going to go to the peak of this bluish line here. And at the peak, as we look down here in that corner, it looks to be about $360 or so would be our max theoretical gain at options expiration. This purple line is where are we right now based on today's trade and then this date. Now this date, actually, we need to move it up to today's date. That changes things a tiny bit. And what we're going to look for here is not necessarily trying to get the peak at options expiration, but maybe kind of like a sweet spot. Okay, so maybe we're like, okay, between 240 something here and maybe 230, I don't know, I'm eyeballing maybe 232, might be an area where if the stock goes in that area, then maybe we'll have a decent return that we might be happy with if we think we want to get out of it altogether. In our case, we're going to kind of watch that zone, but our ideal is to sell another one next week, sell another one next week. Okay, so hopefully that makes sense. Stay Gold says you can't do it in paper money. You have to have skin in the game for you to pay attention to it. And some people are like that. So do really small positions if if that's your approach. Just make sure to do really small position sizes. Okay, so we've got that trade in. Like I said, if we have time, I'll circle back to another long vertical, or actually, I'm just going to show you what it is going to be, and I'll put it in after our class is over. Okay, we're going to come over here to the chart. We're going to look at FANG, which is a oil and energy stock, Diamondback Energy. And it was one of these stocks that dropped way down, like most of the oil and energy stocks did, the end of the day, it clawed itself up to the 30-day moving average. And it also is giving us a trade above the high of the low day in an upward trending stock. So that is the entry we're going to use on that. My intent is to do the 190, 195 on this one and doing the May 15th. Okay, this one only has monthly options. So what did I say? I said 190, 195 is what it looks like will be, or 190 will be out the money. Okay, I want to save some time to go through some of these trades, some of these diagonals. Those of you that have been here in the class with me, we've been tracking some of these trades for a long time. Let's see the ones, there were some that you guys were really excited about. I'm just going to go back real quick and see if any tickers jump out to me as far as which ones they were. Oh, now I'm not seeing it. I think it's okay. We'll just run through them. Okay, first up, AMD, which we didn't talk about last week. I recognized after our time was up. So some of you probably quite want to know about this one. AMD, we have the May 15th option. We got in here the 12th of March. Okay, so about 4 weeks now. So when we initially got into that trade, and it does have weeklies, and so we've been selling some weeklies against it. This particular one, the 227.50, let's see when we sold that. We sold that yesterday. Why did we sell that yesterday? Because we could. Okay, so let's come over here to the accounts. Well, let's just look at the stock real quick so you get an idea what the trend has been. All right, AMD. That's when we initially got in. Look at the big run that it's had right now. I want to go over here to the account statement, AMD, and we're going to be looking at what's happened the last 20 days with these rolls. So yesterday, we bought back the 210 that we had sold previously. We had sold this April 10 250 put. We brought in $5.10. We were able to buy it back for 40 cents. It was like a good chunk of it. It's like it had that huge move. It was like, yeah, let's cash in on that. Let's go ahead. Let's lock in our profits on that leg and let's sell another one. And so this one's quite a bit out of the money compared to the 210. It's the 227.50. So we brought in 555, and it probably hasn't eroded all that much yet if we were to go out to the actual trade here. Oops, get to the right stock. 555, it's down to $4, so I guess it has decayed a little bit for us. In this total of the P&L open, it doesn't include our locked in profits from legs that we've closed. Okay, so that's why you would have to go back to the account statement area and just add everything up. We did that in a little spreadsheet last week. If you want an example of how you might consider doing that in a spreadsheet, maybe go back to last week when we analyzed our trades, and you can see what we did. We laid out each of the strike prices and we put in what did we get when we sold it, what do we get when we're on our way out. Okay, so that's AMD. Akamai. Akamai did something for us today. This guy only has monthlies, and we had put in, if we get 90% of what our credit is, let's get out, let's lock it in. So today it did that. Let's see here, they're pretty early this morning, 8:22 my time, and we bought it back for 47 cents. So it is now in a position for us. Do we want to sell another one? We have May out here, and they only have monthlies until today. And I looked out there today, and guess what? They now have some weeklies available on Akamai. They didn't used to, but these are I shouldn't say brand new. These are new. We'll just call them new. They do have a little bit of open interest in them. So now we do have some opportunities to sell some things that were different. So let's go for the April options expiration. And let's go for something a little bit out of the money. it was a put, right? So let's, I wish some of these were a little bit more liquid. We're only really doing one contract here, so it's not so bad, but let's go out here where there's a bunch of contracts. Let's come out to the 105. Not selling a lot of premium here, but we are going to sell a little bit. So let's go ahead. Let's try to get a midpoint price filling on it. And just doing the one contract. We're going to set this up and we're going to put it to our bucket of our diagonals. Okay, so now we're extending that trade. My expectation actually when I came in here was I thought, oh, well, we're just going to have to sell a May contract, which technically turns it back into, not back, but turns it into a calendar. But because the weeklies are there now, we could do that for. So what strike should we look out for AMD today? The one you could do the one that we just did. AMD. So the question is, what kind of strike price should we look at here? So we did the 227.50. It's about a 33-ish delta. The delta may have been a little bit higher yesterday when I put that in. It might have been a high 30 something, low 40 something delta. Okay. All right. NVIDIA. Let's go look at NVIDIA's chart. We've been in NVIDIA for a long time as well. And I started marking the dates when we were selling premium. We sold some more premium on it here yesterday because it hit a target for us. As we come over here to the monitor tab, bring him up. On this one, this is actually now turned into a calendar because our longer dated put was out here in April. And we got in here at the end of February. So we've had quite a bit of time. So on this one, we brought in, let's see, 229 yesterday. It's now down to 145. So it's eroding very quickly for us. That time decay is working in the favor of that leg. The long leg, however, really is not worth a whole lot. So in this particular trade, it's the selling of those additional puts that is bringing in the money for it. Okay. Yeah, so this one was a long diagonal at the time we got in, but now because the months are the same, it is considered a calendar. Real quickly, Tesla, we're going to close up. Let me just show you the chart on Tesla. We're at about the end of rolling its little life along. It has earnings coming up soon. It only has 8 more days on this option, which is kind of in a time frame when we start to look to sell. Because it has had 3 days coming down to this area, this might be a new short-term support that might be putting in. And if it were to rebound and head back up, we wouldn't have a lot of time for it to drop again. Okay, so we are just going to close down the NVIDIA trade altogether, and I'll go back and do an accounting of all those options, what we sold them for, and work out our net total. I'll be able to spend some time with you on that next week. All right, I am almost out of time. So a couple things. One, I hope you're a subscriber to our Trader Talks channel so you can find our content. If you're not, just come down here in the bottom right-hand corner, a little subscribe button. And then it shows you our playlist. It shows you some of the recent short videos that we've done. Just makes it easy to find our stuff. Now, Barb and I would love for you to follow us on X. Barb is Barb Armstrong CS. I am Connie Hill CS. We post educational content out there, especially during the trading days. And Barb sometimes does it when she's on vacation too. I don't usually do that too much, but we do feed you content of things we think are interesting that you might like. Okay, so follow us. If this was helpful to you today, go ahead and hit the like button on your way out. That lets others find it more easily. It helps us in the YouTube algorithm. And I'll go ahead and I'll put on that thing trade that I told you about that we don't have time to do in class, but I gave you the strikes on at 190, 195 on the May 15 contracts. All right, you guys, going to have a little break in our programming. At the top of the hour, we're going to have investing in dividend stocks. And it is going to be James Boyd leading that discussion today. I know lots of you are James fans, so might be interested in that class. All right. Thank you, Barb, for your help. We kept you pretty busy today. We'll track these trades next week. We'll see you then. Bye bye.